Hey guys, what's up? It's Dan from Crypto Camacho, where I each day will try to find something to teach you about Bitcoin, cryptocurrency, altcoins, trading, something of value. I try to bring to you guys each day, every time I make a video. I want to teach you the tricks that I've learned along the way. I don't claim to be an expert, but I do actively day trade Bitcoin and other cryptocurrencies. I position trade those as well. Right now I'm trading across about 5 or 6 different platforms or different exchanges. I got Liqui, Bittrex, Bitfinex, Polynex, HitBTC, a couple others. It might even be more than 5 or 6 right now. And I've been learning a lot along the way, right? How these exchanges work, how these cryptocurrencies work, what blockchain is, how to best day trade or position trade Bitcoin versus altcoins and other cryptocurrencies. So I've been learning a lot along the way. I found a lot of really good tools and resources. Just came across a tool the other day called BitPay. Maybe some of you guys have heard about that. But basically what BitPay does, it allows you to convert your Bitcoin into dollars or whatever local currency you're in, and then spend it on an actual credit card at stores around you. So think of this. I could go literally into a Starbucks. I could use my BitPay credit card to buy a Starbucks, and it's really being paid in Bitcoin that's being converted to a fiat currency, in my case, to dollars. So pretty cool stuff. A lot of market scanners are coming out. I've shared a few of those with you guys. Different conversion tools or exchange tools are coming out as well. So watch this space. A lot of things are going to be coming out now in the cryptocurrency world in the months to come. And this is not going to slow down. It's only going to heat up from there. So today, I really wanted to take you back to when China started banning ICOs, when China started telling us that they weren't going to allow exchanges and so forth, because a lot of really interesting things happen in the market, in the charts, and I'll show you in a second here. But today, now after all the bad news has passed, after all the panic selling has happened, after all of the Chinese, cryptocurrency enthusiasts drain their accounts and the exchanges of their Bitcoins, now, we can look at the charts and we can see what has actually happened. And so the first one I'll go to and what I want to talk about first is on Bitcoin. So for Bitcoin, check this out. So there's a couple things that happen, and let me just zoom out here a little bit so you can see. So right here, let me get a pen. So right here, this dip, right, this entire dip right here, that happened because China announced that they were going to ban ICOs in China. So people started panicking, crash, right? We got a crash, and it went down to around 3,500 approximately. Then we go all the way back up to about 5,000, right? And then you see we have more crashes right here. So right here, if you look at this really big dip that's happened recently, this happened because China announced that they were going to ban cryptocurrency exchanges in China. And then there was a huge panic right here. So a huge panic right here, right? People didn't know how low this was going to go. And it actually went all the way down to about 2,800 approximately, right? And then now look at where it is today. We're at 3986, so we're about at 4,000 again. So both times these crashes have happened, big crashes, right? These are not small crashes, these are big. The market has recovered. It's gone back past the base that it was at. So take a look at this a little bit closer. So, okay, let's see. So let's just look at this base. So on the first crash, mark the base, right here. Goes up, goes up, goes up, and then look what happens when it cracks the next base. It bounces up, way up again, all the way back up. And this is not unique to Bitcoin, right? Look at Ethereum's chart. And strangely, or maybe not strangely, the Ethereum chart and the Bitcoin chart, they look very, very similar. I don't know if you guys can notice that, but there's big dips right here. There's big dips right here. They look very, very similar, right? But anyway, so look at the Ethereum chart. Let me zoom back out a little bit on this one. So again, same thing happened. Right here, we have, China banning ICOs. Huge drop, right? Huge drop all the way from 5,000 all the way down to, very, very, I'm sorry, this is Ethereum. From all the way from 400 all the way down to 276. That's a big drop, right? And then we see it bounces back up to 341. And then, the news comes out about China banning the exchanges, drops all the way down, bounces right back up, right? So if you could get into the bottom of these, just think of how much you can make. And look at the bases. This is exactly the type of base trading I was talking about. There's the base. That was last base. We get a good run up. We get it going down, 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 down. Oh, we cracked the base right here. All of this could be bought. And then look, we bounce all the way back up, right? Same thing. Look, here's the base. Okay, the base is cracked. Oh, cracked all the way down, cracked all the way down here. And then we get a run all the way up, right? And this happens over and over and over. This happens on the dash chart. Look at the dash chart. And I feel like a broken record, but it's really this simple, right? When you start looking at these charts and you start following them on a day-to-day basis, it's really this simple, right? I mean, it's not simple. It is hard to day trade. There's a lot of other things involved. There's patience, right? Patience is a huge factor. There's timing and timing the market correctly. When do you buy on the drops? When do you sell on the ups? Do you taper and make multiple buys? Do you taper and make multiple sells? You know, there is a lot of different aspects to it, and every trader needs to make up that decision for themselves. You know, what percentage are you after? You know, when you first make a purchase into the cryptocurrency that you're trying to buy, what percentage do you want to make on it? Do you have that in mind? You should definitely plan that ahead of time. If you want to make 10%, 15%, 20%, what do you anticipate, and how do you know? What are your odds of that, right? And I think by using base trading, you can calculate all of that, right? Not all of it, but most of it. I mean, you look over here, and let's just say, okay, let's just use this as a base for Dash. And again, this is the ICO. China said they're going to ban the ICOs, crash, recover. This is the exchange. China said we're going to ban exchanges, crash, boom, recover. So now look at this. Okay, so if I were to buy right here, here's the base, right? That's the clear base. So anything below here, you could have bought. What I would have typically done is I would have bought right here. I would have bought right here. And then I would have done a lot bigger trades right down here, right? So I could really get in size at the bottom. At the beginning, I may nibble a little bit. I may nibble, you know, just to get a little bit in the game, right? I can't resist. I just want to get into the game. But then down towards the bottom, I would make huge position trades, right? Because I know it's going to bounce at least back to the base and maybe higher. In this case, it's much higher, right? So that, if you look at any of the currencies now, I mean, even look at this this random altcoin. I don't even know what this is, BNT. But it's essentially the exact same story. I mean, look, this is when the ICOs happen. There's the crash, covered, right? So let's look over at a couple other altcoins, right? Because these, you know, Bitcoin, Ethereum, and Dash, excuse me, I'm having a hard time today. Bitcoin, Ethereum, and Dash, they are all big major cryptocurrencies, right? But what about the altcoins? What happened on the altcoins? Some of the altcoins weren't affected, right? This is UBitcoin. And this wasn't really affected to the extent that Bitcoin, Ethereum, and the other major cryptocurrencies were. I mean, there are these drops, right? But they're not, you know, exactly timed with the ICOs. I mean, they are, you know, dropping, but they're not as stark. They're not as big of drops. But what did I do during, you know, this, right? Just the other day, I made a quick, I think like 10 or 20%, something like that. Let's see. In this case, it was 8.31%. And to do that little trick, just click on Shift and then hold. Just click on Shift once and then use your, and that's how you do it. One other trick I just recently learned with Coinigy is if you pull your mouse over here to the side and you drag it up or down, you could either make the chart more narrow or more, you know, more wide. And I like this because often, you know, if I was trying to look at the chart down here, I can't see it. How do you see the chart? You got to move it all around. But there's just a pretty quick way to do it, and you just drag right here. A quick little tip. So anyway, look at this trade that I made, okay? So I made this against this base right here. And I really should have waited till it kind of dropped below here, but I didn't. I couldn't resist, and so I bought in. But I was playing off of this base right here, essentially. And so that's what I did. And I was in for just a very quick minute. I wanted to get a quick bite. I think this trade took like an hour or two, maybe 3 hours. And so I bought down at about 4.1, and then I sold up at about 4.4. And again, 8.31%, and I sold a little bit more over here because I didn't end up selling it all for whatever reason. I thought it would spike higher. And I could have even waited. You know, this is where patience comes in, because I could have waited till it went all the way up to 4.8, but I didn't. I wanted to get out. Okay, so let's go over to one other trade, Loon. Same thing here. And I don't show you this to brag. I show you this because I want you guys to know that this is completely doable. I mean, start watching the markets. Start looking at these charts. This is completely doable. This one I did off of this base, right? And, you know, I really should have waited till this base, right? But it still hasn't cracked that base, and I want to trade, before it does. When it cracks this base, you're going to have a bigger position to make. It'll be a better position to do position trading. Like I do a lot bigger trades down here if it cracks this base. But these little ones, you can still do throughout the day. And I don't do huge sizes. I do smaller trades throughout the day for day trading. And when bases are cracked that are this big, that's when I typically do big position trades. Or I'll do huge trades, right? Which have a lot more meat on them, but also can make a lot more money and have a lot lower risk. These smaller day trades have a higher risk, but they're fun. You could take nibbles on it. You could trade at smaller amounts. And so for this one, I made, let's see, about, hold on here. I made on this one, made about 11%, 10 to 11% on that one. And that was very quick too. Again, these are hour increments. So within a 2-hour time frame, I made 11%. Think about that. If you put $1,000 on this trade, within an hour you can make $100, minus fees. The fees are fairly small. And actually, that's something I want to talk about. So fees and how often you should be trading. So I was in a chat room, a Slack channel today, where I get tons and tons of good info about trading and whatnot. But somebody asked the question, should I be trading, one big trade, or should I trade 10 small trades, right? And then they started talking about fees and percentages and how that all works. And they started asking really, what's a better approach? And it kind of dawned on me, well, they're different approaches, right? They're both good approaches. They're just different approaches. If I, for example, made let's say I had a $10,000 account, right? And let's say I wanted to make one trade using that $10,000 on one cryptocurrency. It could be Bitcoin, it could be Ethereum, it could be whatever, right? One trade, $10,000, my risk would be pretty high, right? Because if that trade goes south and goes wrong for whatever reason, maybe some news comes out or whatnot, I could lose a big or significant portion of my account like that, right? So it is definitely more risky. But it also requires a lot less work to actually do. There's one cryptocurrency you have to research, right? There's one trade you have to make. There's, maybe a couple alerts you have to put, before you make the trade. One, coin you have to research. So there's a lot less work involved, a lot less time consuming, but it will definitely be more risky, right? Your upside could be just as great, but your downside could also be just as great. Now let's take the other example. If you were to, make 10 trades, what does that entail? Well, if you make 10 trades, let's say you have $10,000, each trade you're going to put $1,000 into. That means that you're going to have to research, 10 or more different cryptocurrencies that you may want to trade in, right? That's a lot of work to do the research. You will have to put alerts on all 10 of those, trades that you're looking at. So you have to put alerts over all different kinds of coins. Again, a little bit more time consuming, but your risk is going to be a lot lower. Your risk is going to be much lower, right? Because you're spreading your risk across 10 different coins. But in reality, it follows the market. So your risk is kind of based on the market when you start spreading it too thin. So where's a happy medium? I mean, I typically like to trade, anywhere from 2 to 5. 2 to 7. 7 gets a little high, but like 2 to 5. And 2 only if the bases have cracked on some very significant bases, right? So if a base cracked like right here, yeah, I'd maybe make that a huge trade, and I'd take 70% of my account on that trade potentially, right? But I typically like to make multiple trades throughout the day. My sweet spot's maybe 3 to 5 because I think I can get size in there and I can mitigate my risk a bit as well. So take that for what it's worth, food for thought. But hopefully this has been helpful for you guys. I will come out in a couple days, with a couple more videos about some of this stuff. I have an exciting video coming up about ICOs and sentiment analysis and how you can marry the two together to actually find ICOs that may perform better than others. And I'll show you the methodology of how I go about doing this. I'll show you how it's actually done. I'm testing it right now. I've seen some pretty interesting results with it because I'm looking at after the fact as well. After the ICO launches in a month, 2 months time, how does it perform and how does that correlate back with the sentiment analysis? So be looking out for that. But anyway, hope you guys found this helpful. Leave me any questions you have in the comments. Again, follow me on Steemit. Go to Steemit and DSC Enterprises if you can, and follow me there. Subscribe to this video. I'll see you guys next time. This is Dan again from Crypto Camacho. Go to cryptocamacho.com for more information, and I will talk to you guys soon. Later.